about it. So let's just quickly do a recap on my track record for all the setups that I shared with you guys. So real short, if you look at the emojis, you can clearly see since I've simplified things down for you guys by just sharing the buy and the sell boxes, we had a really good nice short there, followed by another one along that mist in between. Nice little breakout pump, and a nice little dump again, another continuation of move. And the rest is history. Here we are today, and we're sitting in a situation where the last setup that I shared with you guys failed. Okay, now that means that the way that we're going to be looking at the target leading into the future needs to change somewhat, because I love the fact that it failed for my hodl bags and for my investment bags, but from a trading point of view, it's always sucky. Now, what do I mean by using a term like always sucky? Well, simple. I was in along with everybody in the Discord last night. This was the setup. We went long at 106, and the idea is that we needed to sell at 107.2-ish. So there's everybody that traded, made their money, we sold, and then the bloody breakout came and the market pumped like a crazy thing. So there's always this. This is a really good day and a really good lesson for anybody wanting to trade for a living. And the reality is you don't know what the future is going to hold. Okay, simple as that. And hindsight, I would have loved to just keep that position because I would have 25 times by now the amount of money that I risked to take the trade. But it's life. It's one of those things. So in times that we do fail, like we've done with the short, we have to go and look at the larger time analysis and scale this thing back down to where we trade so that we don't miss something or become stubborn in the sense that it is still bearish. We have to. It's going to fail. It's going to come. Because let's face it, I'm not here to try and be right. I'll do whatever I need to do to make money. That's the goal with trading. First rule of trading, don't lose money. Second rule of trading, make money. Simple as that. So over to the comments. Let's quickly see it. Morning, Renee. Morning, Liquid Dogs. Peter is saying he's not joining in live. He's on a webinar, so it's just me flying solo today. Saying share some love. Yeah. Let's all feel better of the fact that we were in the long. That could have made us retire today, and we ended up closing it early. Now, if you want to trade with me, guys, you're more than welcome to do that. Meaning that if you look at the fib sequence numbers 1, 1, 2, 3, 5, 8, 13. Okay, so if you look at it from this point of view, once we start getting into multi-week, in this instance, because it's a weekly analysis, pumps, meaning you've got 5 blue candles and you get the 6th one, which is what we had last week. I said, and I'm going to stick to it, it plays out beautifully, that you can expect 8 candles, meaning we can expect this week to be blue, which we're in at the moment, and we can expect another week to be blue at minimum. Resistance will only enter from a Fibonacci level again at around 8. Get the 9th one, which I would love to see, then we can expect 13. Obviously, once we move into all-time high territory, it becomes really hard to know what to do next. So what I would suggest for anybody from a hodl point of view, and remember, I cannot give you any financial advice. I can merely just point out the risks to reward and the statistical data. And what I would say is that it would be better for you going forward to bet that the trend is going to continue on than to expect that it needs to dump so that you can get orders filled if you're sitting on the side. Because that's what normally happens for people getting trapped at the top, is that we've been waiting the whole time for the lows that never comes. And so ride with the momentum and give the momentum time, because clearly that is your friend at the moment. Treat it like that until it fails. Okay. Now, statistically, when we talk about strong bearish divergence occurring, so this will come. And the way that you navigate this is very simple. Anything you do, any buy you take from where the originating pivot is, which for price-wise is 107, up to where you are at that stage is still a buy zone, meaning you can still go long in this situation and expect the market to stay above and keep on going. And only worry, this is where you need to manage risk. Only say you were wrong or the market has failed once price falls below that level again at 104. So anything between where we are now at 111,000 all the way down to 105,000, to round down the numbers, or to round up the numbers, is a buy zone from an investor or hodler point of view.